Earlier in 2018, the CFPB issued a final rule to assist mortgage servicers when communicating with certain borrowers who are facing bankruptcy. These amendments to Regulation Z revise the timing requirements for servicers transitioning between modified or unmodified periodic statements and coupon books when consumers enter or exit bankruptcy. This final rule went into effect on April 19, 2018. In general, the Truth in Lending Act requires mortgage servicers to provide periodic statements to borrowers. Now, the final rule provides a little more leeway to mortgage servicers providing periodic statements to consumers entering or exiting bankruptcy. The rule also provides a clear single statement exemption for the next periodic statement or coupon book that a servicer would otherwise have to provide, regardless of when in the billing cycle the triggering event, such as entering or exiting bankruptcy, occurs. This single statement exemption replaces the single billing cycle exemption in the 2016 Mortgage Servicing Final Rule. Prior to this new rule, the exemption only applied if the payment due date for the billing cycle was less than 14 days after the triggering event. For examples on this, please see the CFPB's Mortgage Servicing Guide provided in the resource links. Credit unions are now required to provide modified periodic statements on residential mortgage loans to borrowers who have filed for bankruptcy, unless an exemption applies. Small servicers are exempt from the periodic statement requirement altogether, and thus also exempt from this change. A small servicer is defined as a credit union who, together with affiliates, services 5,000 or fewer mortgages. If an exemption does not apply, the credit union must continue to provide a modified periodic statement. The modified statement may omit certain information, and it must include a statement identifying the borrower's status as a debtor in bankruptcy, and that the periodic statement is for informational purposes only. In a Chapter 7 or 11 bankruptcy, certain modifications are permitted to the disclosure of the amount due, whereas disclosure of a late payment fee, length of delinquency, notification of possible risks if delinquency is not cured, and the first notice or filing for any foreclosure process information may all be omitted. Reg Z Appendix H contains sample forms. Reg Z also states that the bankruptcy exemption for providing modified periodic statements and coupon books ceases to apply if the borrower reaffirms their personal liability for a loan. A borrower who has reaffirmed personal liability for a loan is not considered a debtor in bankruptcy. In this case, the servicer must provide a standard periodic statement or coupon book without the bankruptcy-specific modifications. In conclusion, this is a brief overview of some of the recent modifications to the 2016 Mortgage Servicing Rule, which went into effect on April 19, 2018. We encourage you to review the sample forms provided by the CFPB and learn more by reviewing the resource links below or contacting CCUL Compliance with any further questions.